Good morning, everybody. Happy Thursday. Today is the 24th. We're going to take a look at some FX pairs as well as Bitcoin. If you are new to the channel, welcome. What we do here is I show you how I analyze price for the most consistent and higher probable entries to help you guys become better traders. All right, so a lot of people's asking me to, what do I think about this new metric? I'm not even sure if this is the one. There was one that was locked, but it only has 7 users. So I'm not sure if that's it or not. But this is the true trend indicator that I guess Jordan's implementing. He's been using this indicator since we started, or since he started. He didn't talk a lot about it, but I guess he's implementing it more. What I know of the indicator is it is a momentum oscillator, a CCI, and it's also got another momentum oscillator attached to it. So it's basically 2 momentum oscillators in one. It's similar to the RSI, or probably more similar to the stochastic indicator rather than the RSI. So yeah, I haven't done any research on it, and I haven't been following his latest videos. I'll get caught up this weekend if I can, and I'll see what's going on. But as of right now, let's just go ahead and talk about what we see happening on the chart with Bitcoin. If I go out here to the daily time frame, you can see that it is still trading at this daily Heath level or supply. If you're new, right there, you can see we've been here for 3 days. Today is day number 3, and as you can see, we did take out this swing high right there, and now you're back down testing today's open. So what I suggested to people is that you probably go ahead and take profits if you took this trade last night, because you're not seeing a lot of momentum, and you're definitely not seeing any momentum after you took out that daily high, right? You're actually seeing a downside reaction from that, and you did take out the low. Now, you could say that it is a trap because you did get above the daily supply zone, but you've already broken out over here, right? Then you broke out from this level there, and you took out that low, so the trap did not work there. You went up, took out this level. Now you have taken out the low again, so I'm just saying it looks a little bit like it's running out of steam. Yesterday was a very small range day. You can see that it absolutely traded inside of that big range day that we had the other day. So down in here was the opportunity, the best opportunity. Testing this level right here, we came into it yesterday morning, so we took this entry as well. You can see that you did get some follow through off of it. It did look like we were going to get stopped out. Here was the test. We didn't take the exact entry or the exact test of the old daily supply zone. We wanted to see it hold support. This was the support that we were watching. So as long as you're not closing an hourly below this level right there, $41,963, then you could take a bullish entry, put your stop under these swing lows. So we came in for the test here, then we closed above it. Second attempt down there. There was the bullish reaction off of the level. On this push lower, that was the entry. And you can see that 2 hours later, it was looking fantastic. Thought it was going to go up, take out the high of day. Everything was looking good. And then we got this. That didn't look very good, and that happened at 1 o'clock p.m. Eastern Standard Time. So I don't know if some kind of news came out and gave this a scare. However, the dollar wasn't doing anything, right? The dollar didn't do anything at all. So as far as make a move like that, just bear with me 1 second here. I have to do something. All right. Let me pull this over here. Let me get this off. All right. So back over here. Sorry. Yesterday when we had that move lower, the dollar wasn't doing anything, right? This is where we were. This is 1 o'clock. So you got a little bit of bearish momentum or bearish movement going on the dollar, and Bitcoin was also bearish. So I don't know what caused Bitcoin to do that, but it wasn't the US dollar getting bullish. That's not what caused this. So anyways, it don't matter because it came down right back to our entries, close to them, depending on where your entry was here. Then, yeah, you can see that we traded up, taking profits up at this level. So basically, when I take profits, I'm taking 2/3 of that position or 75% of the position off with my stop to break even. That gives me a small portion of the position to leave running. We do that because we don't know what price is ever going to do. We don't have a crystal ball. But when we take these entries at high probable areas like we did yesterday, it's best to take profits. That way, if price comes back down and stops us out and then keeps going lower, at least the initial position that we took was profitable. Now, another reason we do that is because occasionally, not often, it's only occasionally, you will be like at the right spot, right time. You'll take your day trade, you'll take your profits at your target, and then you will have continuation that can last for months. And that whatever you have left on that, 25% or of the initial position will end up paying you so much more than the first trade you took in the first place. So that's why we do it. We're not trying to catch the entire move, and we are absolutely not trying to get rich on one single trade. We trade very systematically. We take the same trades all the time because here you will learn how to be consistent. And before you can ever be profitable, you must reach consistency. When you are consistent in the way that you take entries and exits, you can then turn that into a profitable trading strategy. Excuse me. Good cold water. All right, so we are struggling at the daily Heath level. So hopefully, it gets on and goes up up above that, because if you do, you're probably going to get a nice little squeeze. My main target is the yearly open. I'm just basically repeating all this for anybody that is new, that has popped onto this live stream for the very first time, because the people that follow me all the time, they know this stuff already. But we're looking for price to trade up to the yearly open. We want to see these two swing highs, this one and this one, get liquidated. And then we want to see how Bitcoin reacts once it gets above $46,000. A lot of people are calling this the bottom. They're saying that this is the bottom. And it may be, right? It may be. But we were looking for a bullish bounce nonetheless, because you were bullish last week. So there's your bullish week last week. And then here is your bullish continuation. You can see that you are trading above weekly res. Right there. You just got above it. And then you have another one right here. So this is another reason why, taking profits might not be such a bad idea. But Heath, you are looking for that yearly open test. Yes, that's what I'm looking for. But since I don't know what price is going to do, I don't know if it's going to get up there. And I don't know what's going to happen if it gets up there, right? So that's why we're going to go ahead and take a little bit of profits off. Moon stop to break even. You don't have to take 2/3. You can take however much you want. Just try to be consistent with it, right? If you're going to take half off, move your stop to break even, then do that every single time. This way you have data that you can crunch and see what you need to tweak in order to turn your equity curve upside down. Because if you're watching this channel, more than likely your equity curve is going down. All right, so moving on, there's nothing to do on Bitcoin today, obviously. The move was yesterday and the day before. That was the bullish opportunities. Down here was another one. So boom, that, and then you get this pullback, and then, a little bit of continuation. So the reason also that I'm saying that, taking profits might not be such a bad idea is because the DXY has, or is building to, it looks like it's trying to test $99, or at the very least smoke this target here at 98.96. Now, you've seen last hour this thing had a push lower. So where is the open? 22. So here's the open right about here. Then you have 2 hours after you open of expansion, and then pretty much for the rest of the night, all the way up into the London session, the dollar was trading sideways at resistance. So you're into an hourly supply zone here. You're back in it there. So if you look right here, you'll see that you are at resistance, and you've been trading at resistance for a lot of time. This wick low penetrated the low of this candle, and this candle was where everybody's stops are if they took a trade after 2300 hours. Their stop is more than likely setting right underneath that hourly candle. So as you can see, this push lower was to do nothing but liquidate these people, and then you closed bullishly above resistance. Now, when will we not think that this is going to happen? Well, if you close back below support, and then here is your hourly support. So if it tags support here and then slowly reverses until about 8 o'clock, and then you get that spike up. So 98,786. Now, if you go down and take out this swing low here, then, Bitcoin may go higher, right? But it looks like the dollar is trying to build to go on up and take out this swing high. That is the target, it looks like to me. So we are looking to take a euro dollar short. Let's go over here to euro dollar. That is only if this thing closes below resistance. This is resistance here. You can see that you are well above it. So if it closes above it, which it looks like it's going to do, since the resistance level is roughly the midpoint of this hourly expansion candle, if you close up there, then we're going to say, nope, we're not looking for shorts, and price is going to go back and retest the daily open. So that's the daily open right above that yellow line. Let me go back to the hourly. I forgot to even mention the yellow line. So right here, this yellow line is not a resistance or a support level. It is a big figure. It is 1 spot 10. So it's $1.10. These big figure numbers typically can act as support or resistance because a lot of big hedge funds and stuff will take positions based solely on the big figures. Right? So if you go out here to the daily, you can see how you had this longer term trend to the downside. You went down, you took out monthly support and everything on a daily closing basis. Then you started to get this slow grind back to the upside. There's the big figure. So you can see that with this wick and this wick, you were testing it as resistance a little bit. Then there you broke out. Test, 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 test. So we're back under it. So you can see that you are still trading as an inside day. So, I mean, the near term is going up. The longer term is bearish. But the very near term is also, it's sideways. You had this bullish day, but then yesterday you closed back below it. So, I mean, this thing could still get short. It's too early to take any positions right now. So we'll just kind of see what happens with it. But yeah, we're wanting to see it stay below that big figure number. If it can do that and stay below, resistance, we may look to take entries, and we will target this swing low. It's the same swing high that the dollar seems to be targeting right now. All right. So moving on here, let me do this real quick. Let me just slide this over. All right. So yeah, that's what we're gonna wait on and see. I probably won't look to take the short if it trades up there, but then again, I'll watch how it reacts to the yearly or the daily open and the big figure. So this is going to be your daily low. That's kind of one reason why I don't like it short. Also, this is your daily open. You've already had a daily expansion to the downside. Now, I do like it for bearish continuation, and this is the target. So where we're going to take a position in here, we'll see, right? We'll see. It's too early still, but I would love to take that position if it could refuse to close above there, as from this white line to this white line is 24 pips. Thank you, P. Vermeulen, joining the retail level. Let's see here. What is up, traders? Good morning. Can we check Tesla and SPX, please? Yeah, we can go look at that here in a second. Let's look at the pound dollar real quick, and then we'll go do that as my internet starts to crash. Once again, before I went live, I did a test, and I was doing like 24 megabytes per second. So, pound dollar had a big move a couple days ago. And you can see that that big move is being retraced. You've almost retraced all of it. Not quite, but almost. It's been bearish in the long term. You know, come on. Let's go. I put the hamsters on the wheel, so I don't know what's going on. They should be generating enough electricity to keep the internet going. It's very slow. Being retarded is what it is. All right, but anyways, you can see that you are getting that push lower, right? So what we want to see on the euro is already happening. Already happening on the pound. So the pound dollar moving lower, DXY looking like it's trying to pump. So we shall see if it continues. Hopefully I'm still live. I don't know. It's just spinning up. But we'll continue. Let's go look at Tesla. And then we shall have pretty much everything talked about. So if it does crash, it'll be a short stream. But it does look like it's going to crash. What the fuck? Yeah. Everything is shut down. Discord just vanished. Oh man, so disheartening. Alright, so if I can't do anything, we'll probably have to just go ahead and wrap it up. The biggest thing was Bitcoin, talking about it, what we're looking for to happen, and then obviously keeping it situated for today or for the rest of the day. Tomorrow will be Friday, so we'll go into the weekend. Hopefully it goes into the weekend strong. But obviously my internet is crashed. Discord is gone. I can't even get this thing to populate over here. I know, man. It sucks so bad. Like, I don't even want to go live anymore because of it. But there's nothing about it. Like, I have my hands tied behind my back. Let's pull up SPX. Fighting with my hands tied behind my back. It's not about money, right? I've already bought the stupid thing. It's Elon Musk and his stupid freaking dates. They never come. I was supposed to have that thing last year. Then they bumped it up to April this year. April comes, it'll probably be October. And they're charging me more money. They just sent me an email. Because of inflation, we have to rise the price on the Starlink dish and Starlink service. Not by a lot. It's $11, but inflation's killing everything. So lately, the SP, I don't want to get excruciatingly bearish on this thing just yet, because this can still see bullish continuation. This is a big, 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 big candle, guys. It didn't take out last candle's low, but I think it did on the SPX 500, right? That CFD chart. It doesn't have gaps. I think you took out last week's low on that. And if that's the case, then you do have a bullish engulfing here on a weekly. Those typically are better signals than, say, a bullish engulfing on an hourly chart, right? So right now, you can see how small in comparison this weekly range is compared to last week, because you're pulling back. That's all it is. It's just a pullback. So we can't get very bearish on it. I know a lot of people want to be bearish on it because of inflation and everything. Interest rate hikes coming. Look at that. I moved it and it seems to be fine. Yeah, see, on the SPX 500 index, which is the CFD, we can't trade this in America, but other people can. You can see that you did take out last week's low. Very, very, very small, but you did take it out. So this low right here was what? 41388. 4138.8. This one is 4135.9. So by $3, you took out the low by $3, shot to the upside. So obviously that's momentous, and the momentum or order flow is bullish. So as long as that's that, you know, taking a short or looking for death and destruction to all markets because of World War III potentially happening, you know, I would say probably hold off on that. Right? Because it's back to bullish on the week. So this is going to be your weekly open. Maybe you could watch this tomorrow for potential entries. I just don't think you're going to see anything on it today. You might, right? You might. It's your back above that. Where's your daily open? So yeah, it's going to be right at the weekly open, I think. Pretty close to it. No, it isn't. It's way down here. Oh, that was the weekly. Apologies. Yeah, so it's right around in here. Yeah, it's moving up, right? You do have supply zone though. So, I mean, it's bullish on the day. You're right at the weekly open. So if you fail here, I could see it rolling over, right? Getting a little bit more downside. We're not looking for massive downside, just, for that pullback to continue. This is the weekly range right here. Very small range, just like a little doji. US want World War. No, we do not want World War III. Absolutely not. Absolutely not when they're bullish. Much easier because then all you got to do is buy the dip, right? In a bull market, everybody's a professional. It's when you have volatility and uncertainty in the market, that's when you really have to become a trader, because just sitting in a sideways market does not pay. Like if you go back to Bitcoin, come on. You can see that for multiple weeks. This thing's been doing nothing, bouncing from supply to demand, then getting bullish pops and get those bullish pops getting sold into. So, I mean, technically, if you are thinking that this section of price is the bottom, then you're looking to be a buyer, under 40K, right? Because 40K is a big figure number. So basically, hedge funds, investment banks and stuff, they're not looking at daily ETH levels and stuff like that. They're looking at what is the price. It's